Morning, everybody. Like I said earlier, for the early starters, welcome, and thanks for joining us today on the Legacy to Leadership session, hosted by KPMG and Lloyds. On behalf of myself, Vicky, and Vani, welcome today. As a little bit of a brief introduction, who will be sharing the session with you today. My name is Morris. I'm a partner at KPMG UK, and I run our finance transformation practice. And by my side today is Vicky Smith, with Lloyds Banking Group. She is the product owner for Strategic Ledger, which means she's not only been the driving force in transforming finance in that space, but she's also the one that actually runs that space on a day-to-day basis. So whatever we've implemented as a solution, she's inherited that. And then we have Vani, one of the directors in my finance transformation team. Vani has been part of the Lloyds program from start to finish and everything in between. Now, in terms of running order today, I'll start the session with a brief overview on the wider kind of market view, key trends that we see in finance transformation, and some interesting sound bites of what's happened over the last 12 months, which I'll share with you. Then I'll hand over to Vicky, who will unpack the Lloyds program in a bit more detail. So we'll talk about the scale, coverage, we're talking about business outcomes, and we're talking about lessons learned. And then last but not least, we'll hand over to Vani, who will talk about our partnership model, but also leave you with a couple of thoughts for you to ponder on whilst you visit other exhibits later today. And then we'll leave a little bit of time for questions at the end. All good? Right. Suggest we get going in that case. So in terms of finance transformation, I've been in business for about 25 years. And in the last 10 or so, I've had the privilege to meet an awful lot of CFOs. I run KPMG CFO roundtables as well. Those are global in FS. So we did the global banks a couple of months ago. We did investment banks. We have the retail banks, starter banks. And it's interesting to see what the kind of key trends are that come across. What I thought to do for today is just kind of focus on three main pillars, which is have a think about what finance really does. Think about how you organize the finance function and the skills that you require to make that all happen. Now, if we start with the first one about the categorical rethink of what finance is and isn't, like I said, I've been in the business quite a long time, right? So when I read words like strategic advisor, then I chuckle a little bit. I actually wrote articles about this early 2000s, which were called From Scorekeeper to Business Partner, right? So we've always had the ambitions in finance to become more of a business strategic advisor, but it's been tough. So yes, we've changed, right? We improved our processes, we improved our tech. We did stuff a little bit better. We had a bit better controls. But have we really transformed our finance function? Probably not, and we will have to. When we thought about the session today, there's actually a scene that came to mind in a series on TV, which is called The Big Bang Theory. Anybody familiar with that? Effectively, who's not familiar with it? It's four scientists that are friends, and the series kind of follows their lives as friends, and they go through all kinds of adventures together. And there's one particular scene that I find quite telling, which I think reflects on finance as well. It's about Howard and Sheldon, so two scientists. One of them goes, I don't really think you respect my field of expertise. Actually, I don't really think you believe I'm good at what I do. To which the other scientist responds, I think you're very good in what you do. I think you're probably the best in what you do. I just don't think what you do needs doing, right? And that's the risk that we run with finance, right? We need to reinvent ourselves. We need to truly transform to stay relevant in the marketplace. This is not optional, it's essential. On the middle bit, around how to organize finance, you will have heard a lot the last couple of days, and probably the next couple of days, about AI. Right? So if I use that as a bit of a stepping stone, one of the key decisions you will have to make around AI is if you're going to build it or buy it, right? Are you going to create your own capability team and build your AI agents yourselves? Are you going to rely on companies like KPMG with a large repository of AI and buy those from us? Are you relying on Oracle to embed AI in the tool set you've already bought and the licenses you already pay for? Whatever the answer to those questions, it will change the way that you organize yourselves in terms of where the funding comes from, who makes the decisions, who does the governance, who does the controls, who does the overall kind of facilitation of that. And I think, I'm not sure if most of you followed the keynote speaker yesterday, but I think it was the exec from Marriott that also mentioned AI is not artificial intelligence, it's augmented individuals. Now, we in KPMG think slightly differently, but we have the concept of digital twin. Right? So the way that you organize yourselves has to be done in context of how you're going to work on AI. And what we've seen, which you can see on the bottom of some of the top performers, organizations that have categorically moved the dial on their performance have created dedicated COEs on data science and AI, right? Now that's challenging. So the CEOs and CFOs of today are going to be the first generation leaders that will have to run a workforce that's made up of humans and AI. Have a think about that, right? That is quite a step change. The last bit is about talent. For me, that's got a couple of angles. One of them is the demand side. So what do we expect from our people to be those new kind of strategic business advisors in context of AI doing an awful lot for us? But there's the supply side as well. Why would people work for your organizations, right? And I grew up in banking. It's not the sexiest of industries. If we're looking for very savvy, technology-savvy AI people in the market, and we're looking for them to join our finance function, how are we going to make banking and your specific industries interesting for them? There's loads of other tech firms that are sexier to work for than organizations that we work with. If we then deep dive into a couple of the data points that I think are interesting, right? So one of the other things that we do, and it is quite a catchy name, it's called BFFB. It's the Banking Finance Function Benchmarking. And we run this every year, and we've been running it for about 8 years with over 100 banks. So when I talk about the round tables, I play back trends that we see. So we have conversations, we have a standard data set, and then the round tables, and all of those avenues bring an awful lot of interesting inputs. If I guide your attention to the top left, and I categorize that as finance for finance. So it's the traditional way that we look at finance. Focus is very much on the finance operational side, and the focus is very much on value protection. Now, where we all want to get to, according to the audience in the CFO roundtables, is the finance for business angle. Now, like I said, early 2000s, people would have similar kind of thoughts. What we see now, for the first time ever, is categorical change in this space. So people are actually shifting towards the right-hand side, which means the pyramid is turned upside down, and the value creation element of the work that they do is increased significantly. Now, if I guide your attention to the bottom bit, what we've done is try to categorize all the things that finance does, right? I know that's tricky. And you look at the traditional overview, it's very much focused on data reporting and on transaction processing. Now, the data element in that is not the funky data science, it's the data relay run to get data from your systems into Excel, into PowerPoint, into your reporting. And where we see it going is a smaller team, so you can see the size changing, and you see different colors popping up, right? So business partnering is going to be on the forefront. AI analytics is going to be definitely up there. And some of those specialized COEs I mentioned earlier will come to the forefront. So the summary there is finance will have a lot smaller team, but bigger outputs. Very similar to the Marriott exec yesterday on stage as well, which I think had something similar. Then the middle bit, just to outline what that actually means. The blue bars show top, the most senior people in finance, and bottom, the most junior people in finance. Call it spans and layers. And what we've had over the last 15 years is a teardrop shape, right? Most organizations would have, including KPMG. The blue bars is where we are now. So this is a couple of months old. So you can see there's more senior roles being recruited to become that strategic business advisor instead of the person that turns the handle. And where we think it's going to go is the red dotted line, which we call the kite. But one of the CFOs I presented this back to thought it looked more like a coffin. Right? Bit sinister. I don't think it's the end of finance, but it's definitely the end of finance as we know it. And then the right-hand side, I alluded to earlier, if we then talk about these skill sets, and that's our digital twin kind of picture, there you can see that the accounting side has been overtaken by data science and is quickly followed by the business architecture and the market and strategy people. So we call them decision engineers and citizen engineers. The decision engineers really understand the market, think strategically, know what's coming, think about trends. The business architecture understands your business processes, right? So those are a couple of the trends that we have witnessed. And like I said, because of all the technology advancements and the need to transform, the pace in which we see moving people from left to right is increasing. Now, if I bring it back to, if I bring it back to Lloyds and KPMG, then the question is, how do we believe Lloyds has truly transformed, right? Transformation is difficult, right? It will be really, really challenging to hold the line. And where I think Lloyds has been exemplary is being very ambitious, courageous, and committed to truly transform their business. There'll be thousands of reasons to stop halfway through or not even start the journey, right? But holding the line of why you're doing it and truly understanding that is the right thing to do is essential in this. What they've also done is they set out a multi-year strategy. Now, that doesn't mean, despite my previous example, that big bang is the way to go, right? So throughout the journey, they had drops, they had transition states. Every single transition state was self-sufficient, so you could stop there, right? You don't have a halfway house, you could stop there. They have specific business outcomes. Everything that we've articulated is business outcomes, business focused, right? And that means, and I'm going to lose half the room here, it's not just about the technology, it's not just about Oracle, it is about the controls, it's about your processes, it's about your people, it's about how you organize your data, it's how you organize your people, it's all of those things combined. Now people might be wondering, why did Morris put an astronaut on this slide? When we started to have all these workshops with the finance leadership team about where they wanted to go, we need to think about a metaphor of some sort, right? To not go into PowerPoints and loads of bullets because you lose people on the way. And one of the things we, together with Lloyds, came up with is the astronaut, right? Because they want to go far and beyond. They want to go places they've never been before. At which stage somebody in the finance team went, yes, I think I can tell this to my team. They will be excited about this. But we have to acknowledge that at the moment we are bus drivers, right? We do the same circle every year, going for the month end and the quarter ends, and we do direct reporting, we have forecasting. And over the years, we've changed, right? We made the bus go a little bit faster. We got less people on the bus, a bit efficient, but the route is the same and the stops are the same. And that's the starting audience that you begin your journey with, right? To get them to be ambitious and really think about what they want to be in the next couple of years is challenging. Now, the last bit on my side, before I hand over to Vicky, is about KPMG, right? If we expect our clients to take this transformational leap, then we need to be by their side. There's a lot of uncertainty as an astronaut that you will encounter. So what we need to give them is certainty. Certainty of outcome, certainty of performance, but also certainty of commercials, right? So if you look at any consultancy business, 10, 15, 20 years ago, T&M, times and material. Then we went to a delivery-based model, where you pay for deliverables. Then we went to asset-based model, which we currently also have. But now we're moving to an outcome-based model, which means Lloyds can hold us accountable for very specific outcomes. For example, data migration, business readiness, cutover, go live. If we don't achieve those outcomes, we don't get paid. And we're perfectly fine with that. If we expect our clients to be ambitious and transformational, then what we need to do is give them that certainty and be by their side all the way through. With that said, Vicky, I'll hand over to you to briefly outline the scale and coverage of the Lloyds program.
Brilliant. Thanks, Morris. Right, see if I can get this to go the right way. So as Morris said, my name is Vicky Smith and I am the product owner for the strategic ledger at Lloyds Banking Group. But underneath it all, I am an accountant. I have been an accountant for 30 years and I have worked at Lloyds Banking Group in a finance leadership role for 18 years of that. And one of the things that really resonates with me when I transitioned into this role in 2022 was how you have to shift in order to be successful. And specifically, I like the analogy of like now I'm a little bit of a data technician. I like to think I'm a little bit of a technical specialist, definitely around the business architecture and that strategic thinking. And a little bit of a storyteller because, you know, we are a big organisation and it's really important to me and I'm quite passionate about making the finance function at Lloyds Banking Group a brilliant place to work. So a little bit about Lloyds Banking Group, if people don't know what that is. We are actually a UK-based financial service provider covering commercial clients, retail clients, as well as pensions, insurance, and investments. You probably know some of our brands, Lloyds Bank, of course. We have also Bank of Scotland, Halifax, and Scottish Widows, but there are many more. We actually have 28 million customers, and around 22 million of those actually engage with us in a digital fashion. So back in 2022, we started off on a strategic journey where Lloyds Bank want to be the best digital bank for its customers. And by the time we get to 2026, we'll have invested £6 billion in that journey to get there. And of course, finance transformation is really front and centre of being part of that. So I am part of the finance leadership team that is responsible for ensuring that we collaborate across the group with our delivery partners, which are Oracle and KPMG, to ensure we unlock the value for our colleagues, customers and shareholders from that, what that investment brings. So this is a kind of a slide that just shows what the actual technology estate that we delivered, but how we tried to organise ourselves within finance to drive the value out of that was through these 5 pillars. So the first one is around how does the team start enabling growth through the insight that we can provide. So with that investment across the group, of course, that becomes some commitments that we've made to the city and obviously our shareholders. So how do we shift our finance function from just reporting to the numbers, but actually steering the business on the way to how to get to those deliverables? Efficiency, huge thing that landing this Oracle architecture has helped us drive towards. If you think about it, we're a 250-year-old organisation, lots of legacy, lots of heritage practices, lots of different divisional teams who all think how they do it is the right way. So this journey that we're going on is around how we standardise and make more of those processes more efficient. Technology and data obviously is at the heart of everything that we're doing, and it's really important as a finance team that we link into that wider enterprise data strategy, which is on the Google Cloud, and how do we make sure that we get the finance data products that we need to ingest into the Oracle estate in order to deliver our strategic data journeys. Reporting, risk and control, this is front and centre of the agenda. We want to move everything from manual detective controls to automated preventative controls, and the long-term vision to keep continuous monitoring and real-time alerts in that space. And this isn't last for a reason, but people, that's front and centre to what we need to do. As we see there, we've got more than 66,000 colleagues within Lloyds Banking Group that have been touched by this change, as well as 20,000 users of the actual finance infrastructure. So what I wanted to do was tell you a little bit about how we did it, what we did. So our legacy estate was a SAP general ledger. That had been in place for probably more than 30 years, and how I would describe it was it's been a bit bent out of shape. It was everybody's go-to for data, reporting, calculations, and at one point we actually had parts of the business that would have had cost centres set up for Vicky Smith, so you could track my expenses and how much I was costing the bank. So we set about looking at, well, what was our strategic vision for the general ledger actually to start with? And it was, we actually want the strategic general ledger to just be our statutory book of records and a key control point. So we want that to have a thin chart of accounts. So we went through the 2 million rows of data that existed on SAP and cleansed that down. So now our trial balance is 93, it's still pretty big, but it's still 93,000 lines of data. But that was a really key enabler for us to then deliver our attestation, new attestation process using the ARC module. So we have shifted the whole of the group onto the attestation tool to actually close our balance sheet for the month end. And that has simplified lots of processes around task manager, understanding when people have completed their part of the process. And also enabling all of the reporting that comes off the back of that, so stakeholders understand if there's any risk that sits in their balance sheet. So that was a massive achievement. The other piece, we talked about the pillar of efficiency. So we have got lots of manual processes. So circa 8,000 journals get processed at month end. And I know when we were working with Oracle, I think some of the team fell off their chairs around how much processing, manual processing happens. So we have been reviewing all of those manual journals and working out, well, why am I writing them? Is there a data quality issue? So therefore I need to go back to my enterprise data teams and say, fix my data for me. Is it because we don't have the accounting engine to actually get the information automated? So therefore I need to go and look at any technology solutions to solve for that. Am I writing them from management reporting purposes? Because actually, I don't actually like how my numbers have turned out. Can you just shift some things around? And then there's probably a whole other bucket of them that are just, I'm writing these journals because I've always done them. So as we go through this, it's really driven out the fact that, yes, there's some technology solutions, but there's also something we can do as finance colleagues to actually challenge why we're doing things, making recommendations, changing our materiality limits, etc. So it isn't just the technology delivery that's actually started to drive some of our efficiencies. I think the next thing we need to call out is our expenses journey. So we have had 65,000 colleagues shift across onto the new expenses modules. So we have moved from Excel-based submissions, sign-offs via emails, and all of our receipts, posting them off in order to ensure that we have been claiming our expenses in a compliant way. We now, if you get your expenses approved in the morning, you will have the cash in your bank account in the afternoon, because we've hooked this all up to faster payments. So it's really transformed our colleagues' experience. The other thing that we've done in this space, because we actually want our colleague journey to be as great as our customers' journeys when they interact with us. So we've actually run a bit of tech across real time as people are claiming their expenses to get some feedback about how do you think it's going. So I was quite chuffed that we actually got 3.7 out of 5. And what was really great about that, we also got some really great how we could make the product a little bit better. And this is a space where I'm really excited to see how we can make AI work for us in that space. So there's just a few highlights of what we delivered. And I probably can't step past delivered on time and on budget. So we are a finance function. My boss, the CFO, is also responsible for making sure everyone else across the group delivers on their transformation journeys. So he was super supportive and also really great that we delivered that on time. And we did it in 18 months, and we had this ruthless commitment to go live 25, and it was a mantra that we kind of went around the whole of the group to get on board. So it was almost like we couldn't not go live, if that makes sense. And I think that was one of the key learnings as well. We've had stop-start programs before, you're never going to be able to do it, but so super impressed with that. So as we said at the beginning, I think as Maurice said, we're on a journey. The first thing we've done is gone live and want to get this pieces embedded, but there is more that we want to do. A key piece for this is us getting to a faster close, and we made some really important announcements at the half-year results that we were actually going to make a step change in when we make our full-year announcements to the city. So it shows a real commitment to what we've done in the finance space in order to be able to do that, but also shows that I thought that I would be able to have a Christmas and a New Year this year, but I think I probably will still be at work making sure that all of the numbers show up at faster time. But we've still got some more work to do there. Ideally, when we finished our transformation journey, we'll be closing our books on working day 2. The other exciting thing we're doing is we're on the start of our data transformation journey. We've currently transformed 11 data feeds. This year we're starting on the commercial banking data. So I'm really excited to see, can we really design out all of those manual processes that I talked about earlier. And then finally, just wanted to share some of our lessons learned and what went well. I think the team construct was really key. As I said, I'm an accountant. I moved into this role because I was really quite passionate about wanting to make all of the disparate processes that I'd seen better. And I brought into my team some SMEs that understood all the legacy. And that was really important as well, so we could map out all of our end-to-end customer journeys to understand what we needed to change. I was in a breakfast meeting yesterday when we were talking about actually sometimes it makes good sense to bring some of your doubters into the fold, because then they can prove some good challenge, but also be first adopters of seeing how good actually everything can be. I think the fact that we had our delivery partners, so it really did feel like one team, and we made decisions together. I think we mentioned earlier, the CFO was super supportive, would meet on a daily basis if we needed to, and all of the divisional finance directors, because if we needed to make a decision, we made it together as a team. And we risk accepted if we needed to, and then we went forward with one voice. And it was really important to have that psychological safety, so to make sure that we did deliver this safely. So I think we were open and honest. I think we laughed a lot. Hopefully we laughed a lot. I know I'm not ashamed to admit, I did cry a little bit at some points. But like I said, like when I look ahead, I think the key thing for me is that we maintain a ruthless commitment to what we want to achieve, and leverage the technology. Now we've got it in the hands of the users. We're actually seeing that they're coming up with ideas of how we make this better. So that's kind of like my sharing of like my story of what we deliver. But Varney, it'd be great to hear from your perspective.
Thank you, Vicky. I'm sure there were a lot more smiles, Vicky, than tears, and I'm sure we are very all proud what we are here today. Especially Maurice, you talked about the outcomes-driven approach, and Vicky, you're trying to talk about strategic vision. Some of you would have seen, especially who are more techie focused, some of you have seen the stats on Vicky's slide. I'll bring it up for a minute. I'm going to talk through that. Just give me a second, because this slide is quite massive. On the top, you see, it's just not numbers. That's the story of our success. And what that means is transformation is not easy. And for this, I would, some of the key takeaways for us today, I would like to highlight a few things. We work together as a team, and when I reflect on this journey, I'm truly in awe of our partnership, especially with leaders like Maurice and Vicky. So when we worked together, we knew that what was coming. And it demands, this transformation demanded, and it will demand for all of you resilience. It will demand alignment. Alignment of what? The mindset, the approach, and the scope. More also the governance. But we did it, and we did together. We did it on the ground. We were there living and breathing on a daily basis through the breakthroughs and the challenges every day. Give you an example, we talked about 66,000 users. Do you know it was not just Oracle that went live on the 5th of January 2025. We had SAP Ariba, the procurement system, go live the same day. We had Google Cloud, all the integrations, over 300 integrations were routed via Google Cloud. All the 3 massive technologies going live at the same time without impacting any downstream system. So that's not just numbers, that's the success story, a massive achievement of what we have achieved. Let me give you some examples. Vicky, you take pride in paying your suppliers on time, and you've won a number of awards over the years. By reducing the payment process time by 40%, they've outdone their own record. that the suppliers are paid far more quickly, full audit trail, embedded AI, and so on. And there's another example which is very close to my heart. Obviously, all of us are sensitive about environment. So during the transformation program, we found that the colleagues, Lloyd's colleagues, they have their credit cards, and that's made of plastic. So I requested Vicky and her team if there was a possibility if this plastic card can be converted to an eco-friendly material. And within months, even before we went live with the program, the 66,000 colleagues had their cards replaced with a card that was made of eco-friendly material. So that's what we shared as a team, as a value, and that is what we did, what was right for the program. As a team, when we go on the transformation program, for me and for the rest of the team, it was not just a shift in systems or technology. It was a shift in mindset, in behaviors, and driving that real value to the finance function. So I would like that you take 3 key takeaways. Please prioritize your change leadership, because technology alone cannot do transformation, but people do. Please invest in your technical capability, because a robust and a scalable technology is the foundation of sustainable transformation. And finally, choose the right partners. You need to have partners that have cross corporate service transformation experience and deep industry insights, because they are the ones who are going to make that difference for your delivery and the impact across the transformation. So what's so special about our partnership model here? If you see on the top right height, that's Will Chalmers, the CFO, who was also our program sponsor. And he's been with us throughout the program. The other pictures you see there are the testament of how we have collaborated throughout those 18 months. And Lloyds was also nominated for the MCA Awards in the UK. Maurice, you mentioned that the transformation is transforming. So also our teams, both KPMG and LBG, we navigated complexity together. We embedded all the change together. And overall, we demonstrated that we were able to address difference of opinions and had an honest conversation. There were times where there were uncertainties, but again, we embraced that together. So our journey has been one of a shared vision, deep collaboration, and relentless focus on outcomes. And I often say in awe that of not just what we have achieved, but how we have done it together. So the success of our transformation wasn't by chance. It was the result of a trusted partnership, the one which we built together with mutual trust, understanding, and of shared understanding of what true transformation demands. So the 3 key success factors I would like you to take away today are, you need to have that team or partnership that has the deep industry insight, a cross-sector transformation experience, and overall, an outcome-focused and agile mindset. That's quite key for your success. And again, as I said, this is not just about ticking boxes or a systems change. It was about reducing risk, accelerating delivery, and creating a lasting change. And this experience has reinforced what we have always known. When bold leadership meets strong partnership, and when women in technology lead with an intent, the transformation is not just possible, but it's powerful. And one of the final slides, this is for all of you, all the finance leaders in the room. One day or day one, you decide. Transformation is not just a future decision, it's a present decision that you need to take. As finance leaders, you manage the past, but you also now shape the future of things going forward. Your numbers are there with you, but you as finance leaders will write the history. You will write the next chapter of the finance as a function. So this is more than a call of an action, but this is more of a call of ownership. So all the finance leaders in the room, as you go back to your teams and organizations, you need to ask yourself, what is one bold thing I would like to do today? Because the day one is not just marked in your calendar. It's marked in the choice you choose to lead. So the opportunity is yours. Make it count. Thank you.
Right. I think we have a couple of microphones here. We have about 10 minutes for questions. Any questions, anybody in the room?
I saw on the early slide it said $1.5 billion investment. Sorry, I saw on one of the earlier slides it said $1.5 billion. Was that the investment in the actual project, or
No.
what did that mean?
Vicky, do you want me to take that question? So Lloyds, they have their own platforms, and they, for example, they build their mobile app and different mobile apps and technologies and solutions for their customers. So that investment is for that platform. So by doing this change, they've transformed how they invest the money in different platforms for their customers to drive the benefits for their end users.
So it's the entire transformation portfolio, right? So the way that they worked on our program, and to Vicky's point and Vani outlined there, there's a lot of firsts, right? First time you put different people together, first time you make decisions at pace, the first time you collectively buy into the consequences, right? Because some of them are going to be tough. And they apply that same approach to their entire investment portfolio, which is the 1.5 billion.
That's a huge investment. Over how many years was that?
Well, that's for the future investment portfolio, Vicky, right? So it's the combination of. Yep. So it's not just our program. We're not that expensive.
There are
We're really not. We're really not.
programs running across the group, which is to meet the commitments that we've made for the 2026 part of the wider group strategy. So the finance transformation is part of that overall delivery.
Yep. I think we had a question behind you.
Yeah. Question for Vicky. When you were your slide with the 8,000 journal entries, and that was your legacy, what's your current look like, and what did you do to minimize those, accelerate those, take advantage of automation or AI? Can you expand on that?
Yeah, so we started, I guess the biggest transformation that we've done at the moment is with our cost ledgers. And again, it was really important that we got colleagues to, rather than me going, what is it you're doing? Is actually get colleagues to understand what am I doing with these processes. So one of the big transformations we've done, we've automated the cost accruals process, so that eliminated a lot of work. And then we're looking at the investment management processes. So again, we've automated some of those processes with the new technology. But there is still a little bit of a legacy which we need to work through. So of that 8,000 journals, we're probably down to 5,000 journals, but some quite material, I'm going to say, lines on those 8,000 journals, because we need to go at all of our legacy kind of income and balance sheet systems. But yeah, it's been interesting conversations, because I think colleagues think, if I'm not here writing this journal, what is it that I'm going to be doing? And so actually showing them what else they could be doing is kind of probably the exciting part.
Great.
Thank you. I appreciated the "this is what I've done, so this is what I'm going to continue to do" comment that you said. I find that funny.
Good. Any other questions, anybody? I think we have two.
So in addition to the obvious regulatory environment, what makes financial services like Lloyds different from retail or manufacturing in terms of finance transformation?
I think from I think some of it is just around the regulation and the complexity of the product offering that we've got, and probably the size and scale of the balance sheet. I think also Lloyds. But I think what I've learned through this is Lloyds Banking Group is probably quite unique and as every organisation is, around how they approach their current processes and legacy. As I said, we're also an insurance business, so we have to think about how that fits into our transformation strategy. So I don't think there's a one-size-fits-all approach, but it's kind of having a depth of understanding about your processes and then who owns them. But I think from a banking perspective, I think the regulation makes it a lot more complex.
Yeah, I think just to add on to that, right? I think it's a good question. I think where there's a difference as well is, I'm never shy of opinion, right? So here I go. Competition, right? So I run all the sectors in KPMG, and if I compare the FS sector with the corporates one and IGH, which is infrastructure, government and health, completely different tendencies, right? So you're looking for a trigger. I think it was mentioned yesterday as well. And the trigger in banking has not really been profitability, right? Because that's always been quite healthy. You have sticky customers, mortgages, loan savings accounts, and current accounts. If I compare them with the likes of Coca-Cola or Unilever or Shell, they need to be continuously on it, right? So they almost run finance as if they run their business. In FS, that's not always been the case. And I think some of the triggers that we're seeing now, and again, I might offend some of the CFOs in the room, is if you look at the current CFOs that are coming into banking, two things apply. One of them is they won't be in that role for more than 3 years, whilst in the old days you had career CFOs, right? What you also see, and then applies to William Chalmers, the CFO in Lloyds as well, he's got no finance background. He's got a law degree from Harvard, right? You got engineers coming in, you got strategists coming in. Why? Because they think completely differently. They don't think about changing the world that they used to grow up in as analysts and then the finance people and then become financial controller and then become the CFO. They don't have that legacy kind of thinking, right? So I think that there's two triggers that we see in FS that they now suddenly are making headways. And I think I mentioned earlier about being an interesting employer for all this talent that's coming through the ranks. You have to transform, right? But you're either completely different. Yep.
Can I just ask a quick question? You mentioned working day 2 as your close. Where did it start? And just very quickly, how did you achieve?
So we probably currently close the general ledger or finish our attestations on working day 12. So as part of this journey, we've moved to close some of our cost ledgers sooner. But the aspiration to get to working day 2 is when we start on the heavy lifting on the commercial banking data feeds, because we have to go with the slowest feed, if that makes sense. So we've got something like 50 inbound systems coming off of legacy infrastructure, but we want to repoint it through the data model. And then, so get that hit quicker, and then make sure we don't have to do anything to that data once it gets into the ledger, so fix all the data quality. So we've got a way to go, so that's probably our next, I don't know, planet that we want to land on, Maurice?
Mm-hmm. Yep. Yep, in the back.
One of your slides said going forward is about learning from mistakes, I think learning from failures. So I was just curious, as part of your process, I guess, what did you learn? And as you think about building on future Oracle technology, what would you continue to do or do differently?
So what, can I just check, what have I learned, what I would do? Gosh, there's so much. Like,
We've got 2 minutes, Vicky.
yeah. I think that piece around making sure that you bring stakeholders with you has been, that's been really important. I think we operate I don't know, like a 2-in-a-box model. So the product owner, and I've got a tech lead who unfortunately couldn't be here. I think making that transition to be, as I said, I think I'm like a crossover. They need to become more business focused. I needed to become more tech focused. I think if I did it again, I'd want that to be quicker to get into that position. There was still a little bit of a legacy. Apologies if anyone's an engineer, but the engineer knows best. So I think that's probably one. I think because we were running at pace, So we were running through SIT and UAT cycles. It was like Vicky signed the end of the SIT report, and I was going, but we've not done our integration testing. Isn't that the definition of what SIT is? So we had to make some bold decisions around if we wanted to keep on track working with Oracle and KPMG, what were we willing to risk accept. So I definitely would, as we're going on this next journey, make sure we planned all of that out quicker and don't underestimate integrations or our environment strategy to make sure you had enough time for the users. So that's probably some, and they're probably the things that made me cry. Or like, will the faster payments go out first time we ran them? Yeah.
Agreed. One final question, anybody? Yep, in the front.
I was curious how, like staffing, did you have anyone fully focus on the implementation during this whole project, or was it pretty much staff splitting their time?
No, we had a fully focused implementation team. So we had the program director kind of running all of the, I'm going to call it route to live, and the governance. So making sure that everyone was doing what they needed. So there was a dedicated team, probably of about over about 100 people dedicated to the implementation.
Thank you.
Good stuff. Thanks, everybody. Thanks for joining us today.
Thank you.